Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds, so the big players and institutions in the market are doing, so how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we are clearly in an uptrend from a monthly perspective. The market has been creating a series of impulses and corrections, and this all started with the breakout away from this historical level of structure here for this market. In fact, what we know is that this level here was acting as previous resistance for many years. Every time that the market tested its zone, it got rejected to the downside, and then with this impulse to the upside, the market broke above that zone. Now, what we know is that in the market, when there is a strong level of resistance that the market is respecting in multiple occasions, once the market manages to break above that zone, at that point, all that previous resistance becomes support. So it is no surprise that the market then is supposed to go and retest the previous resistance turn support and create a rejection to the upside, which is in fact exactly what happened here. The market went for the retest of the previous resistance turn support and then started a massive rejection to the upside, exactly what you would naturally expect in a situation like this. We can also notice that as the market is clearly in this monthly uptrend, it has been creating a series of monthly higher highs and higher lows. The last leg was this strong impulse to the upside that created a new higher high. The next logical step would be for the market to first print a correction and then more bullish continuation, essentially for the creation of a new higher low and then higher high. So here on the monthly time frame, everything is quite clear. Let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear as well. We had a strong move to the upside, then the market consolidated in this triangle formation. It is quite clear how the market here created this triangle formation and consolidation pattern. This usually is referred to as a wedge formation, in which you essentially have lower highs and higher lows happening at the same time. This is a standard wedge formation, after which you essentially have the breakout away from this triangle formation or wedge, call it as you prefer. And from here, there is then the creation of a massive impulse to the upside, which is in fact exactly what we just got here from a weekly standpoint on gold. So monthly and weekly are very clear. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective, the situation is quite straightforward as well. I spoke about gold just a few days ago when the market was creating this M pattern. I explained all the reasons for which there was a good probability of seeing more bullish continuation. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, here on the daily time frame, what we can notice is that we have a market which, in creating this push to the upside, is now starting to lose its bullish momentum. We have now seen many horizontal candles which have open and close prices which are very close. So it seems like we're not getting anymore these massive bullish candles. So it seems like now every time that the market goes a bit higher, new sellers step in. So let's go and see what we have when it comes to the the commitment of traders. So how the big players in the market are approaching this situation? Well, if we go and see what we have here on gold, we can notice how with the last reports, net positions have been decreased. So institutions seem to be moving back to the bearish side for gold. We went from 302.5k net positions down to 268.6k net positions. So it seems like institutions are now again moving back to the bearish side for gold, reaching 6,100 shorts and added with the last report and 9,700 longs getting closed. And also with the previous report, we had 5,200 shorts getting added from an institutional perspective and 12,700 shorts getting closed. So it seems like institutions are now increasing their shorts and decreasing their longs. We went, in fact, from having 33k shorts from an institutional perspective all the way up to now having 65k shorts from an institutional perspective. So essentially they doubled their amount of shorts with the last reports, and longs are getting decreased. Institutions went from having 356.5k longs all the way down to 334k longs. So clearly institutions are adding shorts and closing longs with the last reports, making gold weaker. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel. You find the link in description so you never miss new updates. Now back to the analysis. So from a daily perspective, what we can see at the moment is that we have a market which clearly is testing resistance and losing its bullish momentum. There is no surprise that these candles have shown a decrease in the strength of the bulls here for gold, because clearly institutions are starting to short, and as institutions short, there is an increased probability of seeing a potential correction here. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market and institutions would continue to add shorts, at that point I wouldn't be surprised to see a potential rejection to the downside away from this area. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, I would really suggest that using the link in the description, you go and check out my website. In fact, here you have the possibility to gain access to the best trading program on the planet. First of all, you gain access to all my courses. Now, the courses go from the very basics of charting all the way to the most advanced topics like building automated trading strategies using the MQL4 and MQL5 languages, to building portfolios of strategies and using quantitative finance tools like the Quant Analyzer to do all of that. You also gain access to the trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me, the COT data software that you very often see me use directly in my analysis here on YouTube. You also have the possibility to gain access to all my EAs. Now, you see here on the website presentations from each and every one of them. And you also have the possibility to gain access to my live trading show. So a live stream coming directly from my account of all the trades that I execute, open, close, manage. So basically a complete live stream. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access just below here, the testimonials, with a massive promotion. Now, there is still time to join, so I really suggest that you go and check it out. For this time slot, there are still spots. You can gain access directly from here, and automatically you will find yourself on the student dashboard using the email and password that you will create during the checkout process. So also that completely automated. Now, you find the link in the description of this video. I really suggest that at least you go and check it out, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.